Hi there, everybody, and welcome to our kind of fireside chat today. I'm joined by my colleagues Muhammed Wagley, Portfolio Manager in Santon, and Andrew Padoa, Portfolio Manager, Big Chief in the Durban office, and myself, Craig Pheiffer, Chief Investment Strategist. And today we're just going to chat about some of the megatrends that are coming to the markets or coming to the world, and how we can probably look to benefit from those trends in the investment space. And, maybe if I just kick off and think about things, the world's changed quite a bit in the last little while. In the investment game, we all like to throw around these catchy phrases. And there's one by a guy called Tony Deeden. He's an investment guru at Edelweiss. And he said a map's only useful if you know where you are. So maybe to paint a picture of, the map we're going to talk about, but where we are, just looking back at the last, year or two, and we've had three, kind of defining moments or incidences that have shaped the markets, shaped economies, and shaped where we're going. And I think the first of those is around the rapid increase in interest rates, and that's been fueled by the rapid increase in inflation more recently. And if we look at inflation rates, the US has got a 2% target. They've been idling along around that level for a very long time. And then we had Russia invading Ukraine. That impacted energy prices. Russia, a big exporter of energy, particularly natural gas to Europe. So that saw energy prices spike. The Ukraine, on the other hand, a big food basket for Europe. And that impact had saw food prices kicking up as well. So food and energy prices going up around the world, and that drove inflation to kind of record levels. The US used to 2% inflation. They ended up at 9% inflation. Global developed market countries around the world also having these having inflation rates that some of them even went into double digits. So with that, there was a monetary policy response from central banks around the world, and they pushed up rates very quickly. And I've had a look at a graph over the last 3 decades. There were sort of 5 incidences of monetary policy tightening in that period. And this instance, we had about 15 months where rates just spiked up very quickly. I worked out over those 15 months, 2022, 2023, it was about an average of 33 basis points per month. So certainly the quickest increase or tightening of monetary policy that we've seen for a long, long time. So that ultimately will impact growth and economies going forward. But that was a defining moment. So high inflation, high interest rates, the Russian invasion of Ukraine. And then alongside that, we also had the back end of COVID. Most of the world had kind of got through it, but China, they were still suffering from the disease. And they had to lock down cities quite harshly. And one thing I have a look at, I've got this app on my phone called Marine Traffic, which is quite handy, especially when you go to Durban and you can look from your balcony and view there, and you see the boats out there, and you can name them, and it just shows you the kind of a map of all the ships around the area. And it's pretty light when I look around. I was there a week or two ago. I counted 15 boats you could see on the horizon waiting to come into the harbour. But then you have a look at the picture for China and the ships coming into Singapore and all those coastal regions and up the rivers. It's a mass of boats, just thousands of these things. And in those lockdown times, those boats were just stuck in the ocean. They couldn't come in. And that created a whole lot of supply chain issues. I think, just created problems of producing components that go into producing those goods themselves. And all of that shortage of components and things that go into things just pushed up the prices of goods. So you had that force on inflation as well. So I think those are kind of some macro issues that have come to the fore. But I think, and we'll talk about how that's shaping investments going forward. But I'm just going to kick off with maybe looking at semiconductors and artificial intelligence and how that's playing out in the market. And I'm sure you've all had a go with ChatGPT. Have you run a few queries and done a few things? And you see, sometimes it takes quite a long time to get a response once you've typed it in. Mo, 10 girlfriends near me. It takes a bit of time for the AI to work through all the algorithms and its learned response. And that's because it takes a huge amount of computing power to do that. And that computing power is all in the little chips that are produced, that are in your phone. Apple designed them. They're manufactured in Taiwan. Samsung produces they design and produce their own. But it's the world, and artificial intelligence relies on these little computer chips. And they're becoming more and more advanced as we go along. And Andrew, I know ASML is a favorite stock of yours. It's in our global equity portfolio. But that stock in particular, that company, they have managed to reduce the degree to which they can work on those little chips, the number of transistors they can put on those chips. And we talk in the size of those chips in nanometers. And you have to go and look up what a nanometer is. And a nanometer is a billionth of a meter. It's tiny. A human hair is like 60,000 nanometers. So now we're talking about a company that managed to get down to 13.5 nanometers, then to 5, and then the holy grail of 3 nanometers. They really, really got down to this tiny, tiny microscopic, even micro-microscopic level of detail on these chips. And they're the only company that produces the machines that can produce those chips. And it's taken them a long time, a lot of capital, a lot of intellectual property to get to that level of production. Other companies, Japan, have tried to do the same thing. They just haven't managed to get it down. The level of accuracy you need is just amazing and tremendous, and beyond the scope of a lot of other countries and companies without that same level of capital. So that's one of the companies that we like, ASML, that produces the machines. So they're really at the top of the food chain in terms of semiconductors. That's a company we like. That's at the start of the food chain. And then other companies like NVIDIA really are the champions of graphical processing units that are used in artificial intelligence. And they're kind of the market leaders in that space as well. So NVIDIA have partnered with a lot of other companies like Ericsson's and whatever. They can manufacture or produce a digital version of a city or a factory, like the BMW factory or cities in Scandinavia. They call them digital twins before they actually produce them in the real world. And you can kind of see what might go wrong in the digital world before you actually go out and put it into practice. Andy, what are you seeing as some of the trends that are coming?
Thanks, Craig. So on healthcare, there's quite a few different subsectors within healthcare, but I wanted to touch on the life sciences sector as well as pet healthcare. So in the life sciences sector, if we look at pharmaceutical companies like Pfizer and Moderna, they made a huge amount of money during the pandemic with the sales of their vaccines. Pharmaceutical companies on average spend between 10 and 20% of their sales and reinvest that back into research and development to come up with new drugs and to come up with new vaccines. Now, we don't know if these new drugs and new vaccines are going to be successful or not, but what we do know is that they're going to be buying equipment from the likes of Danaher and Thermo Fisher during the drug discovery process. Someone said to me once that during the commodities boom, it wasn't the miners that made the most amount of money. It was the guys that were selling the picks and shovels to the mines. And that's effectively what Thermo Fisher and Danaher do. They are the picks and shovels to the pharmaceutical industry. Sometimes going one up in the supply chain is a safer bet, and it's similar to that ASML example you gave earlier. And another thing I wanted to highlight is, the longer your time horizon as an investor, the more important the quality of the business, the quality of the management, and the quality of their capital allocation decisions become. And Thermo Fisher and Danaher definitely tick those boxes. They are very, very well-run companies and have phenomenal track records. In fact, if you compare their stock price performance against the global stock market, as well as Berkshire Hathaway, they've outperformed by 10% per annum over the last 5 years, 10 years, 15 years, and 20 years. It's a really, really phenomenal track record. And then on to IDEX Laboratories, so that's in the pet healthcare space. We are seeing millennials having less children. They're having less children than their parents' generation did. Fertility rates have been dropping over the last 4 decades. Japan already sells more adult nappies than children's nappies, and that's coming to Europe and the US. It's just a matter of when. So millennials are not having as many kids as their parents, but instead of having kids, they're having pets. And they're not just having pets, but they're spending money on their pets like it's their own children. So now we've seen the likes of pet healthcare as a new thing that's developed over the last 10 years. So I have my own example of this. My wife and I, we had a Yorkie. His name was Teddy, and Teddy got sick in 2019 and he had cancer and passed away in mid-2020. The amount of money that we spent to try and get Teddy to come right was huge. And there's no ways my wife's parents or my parents would have spent the same amount of money. So there's been this kind of shift in society or cultural shift where, pets are now part of the family and you're willing to spend money on them like it's your own children. And IDEX Laboratories is the dominant provider of veterinary diagnostics in the world. So when you take your dog or cat to the vet, if there's something wrong with them, it's very likely that the vet will use IDEX Laboratories equipment to try and figure out what is wrong with the animal. So the final theme I wanted to chat about today is what's been going on in the industrial sector, and you can call it the rewiring of supply chains. So over the last few decades, a lot of manufacturing has moved to China because it's cheap, it's been efficient. But then the pandemic hits, and you realize that you gave up. Well, you sacrificed resilience at the end of the day. Because for 2020, 2021, and a large part of 2022, you can have a fantastic product, but if you can't manufacture it, you can't have any sales. So I think manufacturers were taught a nasty lesson during the pandemic. So what you're likely to see is that, if you are a big manufacturing business, or if you have a large supply chain positioned in China, you might still have it there, but you're probably wanting to diversify, just to kind of spread your eggs a bit, so that you don't have a similar supply chain situation like you did in the pandemic. So, and we're already seeing that. So TSMC are building factories in Arizona, and we are seeing the likes of Tesla building in Mexico. We have Apple building iPhones in India. We even have Intel, the American tech company, building factories in France. And this is a big tailwind for companies like the Siemens of the world, the Honeywells of the world, the Schneiders of the world, and the Rockwell Automation. Because when these new factories are being built, they're going to be using state-of-the-art equipment and trying to make it as digital as possible. And these are the dominant players in that space. And there's the final point on the sector is that historically industrial companies were very cyclical. Their earnings were very, lumpy. But what we're seeing now is that more and more of their machines are being required to be serviced, and they're having more and more software that they're actually selling to manufacturers. And with the selling of software, becomes more smoother earnings. It's more annuity income from the software side of things. So their earnings should be less lumpy going forward, which is a nice thing for investors like us.
They kind of sell software as a service now. You don't just buy it once off the shelf, and you have to keep renewing your subscription. Sneaky.
No, nice way to do business.
The subscriptions are the last thing we do away with. Consumers. Always good to have recurring business.
Mo, what are you seeing on your side?
A lot of these themes are quite pervasive, and the ones that I'll be talking about are sort of no different. The first one I'd like to address is what we're seeing in terms of a shift to sort of renewable energy. Very simply put, what that is shifting away from traditional energy sources towards those resources that can be replenished over the course of sort of a human timescale. And what we're seeing is that buy-in towards this trend has been pervasive pretty much across the board. You're looking at companies, countries, and really society as a whole really pushing towards these sort of green goals, green targets. About 70 countries in the world have announced plans to have net carbon neutrality by 2050, which really isn't too far away. And when you look at the constituents of those 70 countries, they include China, the US, and Europe, who combined constitute about 76% of global emissions. And, this pursuit of carbon neutrality has forced everyone to sort of rethink how we look at power generation, how we look at transport. And, along those lines, UBS, you guys might be familiar with them, the investment bank, they project that by 2030, 50% of cars will be electric vehicles. Now, to put that number into further perspective, last year, about 14% of new cars sold were electric vehicles. So there's a massively long runway ahead in this specific trend. But when you look at green energy and green tech, it's got practical applications in many different industries. You can think of things like digitizations, things like industrial gases, along with renewable energy, electric vehicles. There's a whole bunch of other practical applications that this is going to be super useful for going forward. When I think about companies that we look at sort of at the forefront of these themes, or this theme rather, Next Era Energy is one that comes to mind. They are a wind and solar company based out of Florida in the States. If I'm not mistaken, they're the biggest one in the world. And if you go by market cap, they're actually the largest electric utility provider in the world as well. So that's definitely one that we follow very closely. There are a handful of companies that we follow as well, one of them being Linde PLC, which is perhaps the biggest supplier of industrial gases, big chemical manufacturer, probably the biggest player in this space. That's another one we look at relatively closely as well. The other theme that I wanted to address was the new era of security that we're seeing. In many ways, this was sort of accelerated by the Russian invasion into Ukraine. And what that's done, it's led countries to sort of look a little bit more inward. I think security considerations have become a lot more in focus. And I suppose it does make sense, for the longest time, this type of war wasn't necessarily conceivable, where countries are looking inwards. And, countries that subsequent to World War II didn't really have any significant military presence, we're seeing them allocate significant funds to their defense budget going forward. The big ones that I can think of there are Japan and Germany. I think, I'm going to paraphrase here, but Kathy Warden, who is the CEO of Northrop Grumman, you guys will be well familiar, but this is a company that we look at closely in this space. I think she sums it up really well. She says, the main deterrence to conflict is to show that you have the capacity to end a conflict quickly. So I think it might help to think about companies in this space sort of the way we think about security at home, but not necessarily securities for our homes. These guys serve as security for the US and sort of their NATO allies. With the increase in defense spending, these guys have a long runway ahead of them. I think it ties into a trend of deglobalization as well. As we sort of start to look inwards, it really just computes that we're going to spend a little bit more money on defense. Companies in this space include Raytheon, who are, I suppose you could say, a little bit more of a diversified way of getting exposure to this. A lot of what they do would be considered aerospace, but they also produce anti-tank missiles, if I'm not mistaken. But in addition to that, there's some fighter jets that have gone through as well, F-11s, if I'm not mistaken. And I mentioned Kathy Warden earlier. That is their flagship product and really one of the most lethal fighter jets ever built. And then the last one I'll mention is the B-12 bomber, which is, B-12 bomber.
F-11 is the Lockheed Martin.
Yes, F-11.
B-21 is the Northrop.
B-21 is Northrop Grumman. Yeah. That is Kathy Warden's baby. Stealth bomber. Can't even see it in the sky. It's one of the most high-tech things around. If I'm not mistaken, they go for, correct me if I'm wrong, like 200 million? They go for 200 million and the US has ordered hundreds of them. So that just gives you an idea of sort of the runway that this sort of trend has ahead of it.
Yeah, I think we just saw with the whole debt ceiling issue in the US, the one thing that both parties could agree on when they finally did agree was that, kind of cut back on spending on just about everything, but they did agree to increase defense spending by a good 3% or so. So, yeah, I think that talks to your theme there. Generally, we think about these themes or different themes or invest on themes, but at the end of the day, it still comes down to valuations and looking at individual companies. And Andrew, you mentioned it around quality and growth. And it's important when we're looking at these things as we do that, they need to pass those filters of being quality companies with a good long track record of quality, earnings growth. They need to also then, have be at the right price for us to look to buy them. So it's not just a case of it's a great story, this company's in that space, so it must do well. It can be a great company, but maybe the market's already priced it well beyond, a reasonable level. So all of those things come into our thinking as well. And I guess any investor should be thinking about those things as well. So thanks very much, gents. So it was a great discussion today. Thank you.